Man, you know what's frustrating? All these rich people saying that if you want to build wealth, just invest in real estate. Like no shit, Einstein. Like it's that easy to save up hundreds and thousands of dollars for the down payment. And then if you're renting it out, you have to find the right tenants. What if you get a crappy tenant that destroys your property? We've all heard of the nightmares. Well, thankfully you can invest in real estate in the form of REITs, which is the topic of today's video. Pros and cons of REITs. Before we start, I upload videos on financial tips and financial comedy. So if you want to learn more about financial tips or get a good laugh, please subscribe to my channel. Now that we got that out of the way, let's continue. So a REIT, or real estate investment trust, allows people like you and I to invest in real estate property without the headaches that comes with owning a property or managing a property. And we all know the work it takes to buy a property. You have to do a lot of research, work with an agent, work with the bank to get a mortgage. It's just a lot of work. So REITs essentially simplifies all of that. It's essentially real estate investing for dummies, and I love it. So to put it simply, REITs are a pool of funds investing in real estate assets. It's kind of like ETFs and mutual funds, except you're not investing in companies, you're investing in real estates that generate income. So essentially you're owning a share of a company that owns real estate assets, and when they collect rent and profit share of businesses, you collect a piece of that profit. So think of it as dividends, as if you would collect rent if you owned a real estate property. So there's a couple big advantages to reinvesting. So first of all, the barrier to entry, well, there's none. You don't have to save up for a large down payment or go to a bank to get a loan. You literally just log into your trading account and buy it like you would any other stock. It's that easy. The second advantage is that it's much more liquid than regular real estate assets. You can literally sell REITs whenever you want. Whereas for physical real estate assets, well, the process can take weeks or even months. Well, third, you don't have to deal with those nasty tenants. You don't have to get into those ugly confrontations and all that mess. And fourth, high dividend yields that pay monthly. That's right. REITs by law have to pay 90% of their taxable income to shareholders. So it's a great way to make some passive income like you would if you were to rent out your own property. And last but not least, there's a good potential for high returns. Not only do you get very high dividends, usually higher than other dividend stocks, but if property value rises, then the REIT's value will rise as well. So those are the positive. What about the negatives? So first of all, just like a regular real estate market, the REIT's value is very sensitive to interest rates. Actually, we see it right now. As the interest rates rise, the property values decrease because less people can borrow. This will affect REIT's valuation as well. The second downside are the market trends. If the REIT you're investing in focuses mainly on, for example, office spaces, well, when the pandemic hit, people start to work from home, which obviously decreased the value of these office spaces, which obviously negatively impacted valuations of REITs, which only focused on office spaces. Third is that the dividend of REITs is taxed a little bit more differently than other dividends. If you're putting Canadian REITs into retirement accounts like TFSA or RRSP, then dividends are tax-free. But if they're not, you'll be taxed at regular income and capital gains, which is usually higher than dividends from other stocks, which gets a preferred tax rate. So if you do want to invest in REITs, it's better to buy them in your investment account and invest in long term. However, if you invest in REITs that pays in US dollars, you'll still be taxed even if you put them into your investment accounts. They're not shielded. In a future video, I'll discuss US REITs investing in Canada. Overall, I love REITs because I love the simplicity and I love the fact that it's very liquid. Investing in a physical property is a lot of commitment, and investing in REITs just makes it so much easier for me, while bringing in a lot of the benefits of investing in real estate while cutting out a lot of the headaches. It is a great investment tool for beginners who wants to invest in real estate that don't have the time or the down payment. I personally own some of the biggest REITs in Canada, like RioCan or Granite, and I've held them for quite a long time, and I love the fact that they give monthly payments. If you learned something from this video, please remember to subscribe and turn on notifications for future videos regarding financial tips and financial comedy.